Welcome to Second Take, the show that focuses on the issues behind the news. It has been another dramatic week in the ongoing tussle over iron ore rights at Sishen in the Northern Cape. Engineering News editor Terence Creamer joins me to talk about ArcelorMittal South Africa's latest moves. Terence, welcome to Second Take. ArcelorMittal South Africa has announced this week that it will buy Imperial Crown Trading in a move to shore up its iron ore position. Do you think this move makes sense?
Yes, I think what ArcelorMittal has admitted through this move is that it did behave incompetently in not converting its mineral rights at Sishen. And therefore it's having to find alternative mechanisms. And the mechanisms it's chosen to find, one is arbitration and to try shore things up there. But the second mechanism is really to unveil an empowerment deal involving some of the players that have got access to prospecting rights at Sishen. That's the Imperial Crown Trading. So it's a two-part deal. One is very controversial. They're saying that they'll pay RCT 800 million rand should their rights be confirmed at Sishen. And this is a precarious thing because we don't know whether those rights will be confirmed. There's a review happening at the DMR. We were expecting actually an outcome of that review this week, but it could be imminent, and that could reverse the whole thing. But there's also a court action being taken by Kumba at the moment, and that court action could also overturn it. So they put a value of 800 million to that. Now, why did ArcelorMittal move ahead and sort of go ahead with RCT when this is so precarious? I think because they wanted to set a sort of a cap on how much they would pay RCT should they get those rights, because they are worth a lot more should those rights be confirmed. So they've set a cap even though there's this uncertainty. The other aspect is that they've included RCT shareholders in a BEE deal, which is a 9.1 BEE deal, which they announced this week. Now that has raised a lot of eyebrows because basically RCT's real value, were they ever part of that consortium agreement? What value do they add? It seems that they were just in the right place with these rights at the right time. So they've announced that, so there's 21% of that deal goes to strategic equity partners led by Sandile Zungu, also very politically connected. And the rest will go to an ESOP in the form of, to the staff in the form of an ESOP. Now, I think tactically, if you say we've been incompetent and not converted our rights, tactically it makes sense when you're in an adversarial relationship with the owner of Sishen Kumba Iron Ore, or the Sishen Iron Ore Company, to look to the alternative. So tactically, I think it does make sense. But it does raise all sorts of questions about black empowerment, and probably holds a mirror up to the ugliest face of black empowerment in this country.
Terence, last time when we spoke about this issue on the Second Take show, you mentioned that ArcelorMittal South Africa had been the big loser and that there were some risks for Kumba. Do you believe that this equation has shifted, and also are there any risks for the new empowerment partners?
Well, I think there's no risks for the new empowerment partners. One, they could get 800 million rand for a bit of paperwork, and two, they've got themselves involved in an empowerment deal where dividends will flow. It's fully funded by ArcelorMittal. There's no equity contribution, and eventually there's going to be money flowing to that grouping, whatever their percentage of that 21% is. And it's an asset-based deal. It's not at the listed company deal. But still, I don't think there's much risk for RCT and for the new BEE shareholders unless the steel company really doesn't perform well over the next few years. And it is a cyclical business, and it is, there is a lot of uncertainty around steel at the moment, but I think ultimately steel will come back at some point and go down at some point again, but I think ultimately there's very little risk for RCT. But I think the balance of risk have shifted against Kumba. Yes, ArcelorMittal remains a big loser. Their incompetence in not converting their rights has led to this, and they're going to be probably paying, well, they already are paying more for iron ore, and that's an interim supply agreement that lasts till next year. Now whether those windfalls, which are estimated at 1.1 billion rand, are retained by Kumba is now in doubt, because I think the RCT will be looking at whether that shouldn't really be going to them. So will government, because actually as custodian of the mineral right, it's reverted to the state. So there's a whole blurring around the government intervention around this process as well, because government has said in principle they want to retain a steel industry, a competitive steel industry, and that requires competitively priced iron ore. On the other hand, they would like ArcelorMittal to pass on those benefits. So there's a sort of cap as to how much Kumba can really earn, I think, out of domestic iron ore in future because of the state's intervention. But now with this tactical intervention or tactical defence that ArcelorMittal has introduced, I think it adds a new dimension of risk for Kumba. I think we can say the worst case scenario for Kumba is if RCT's rights, or first their prospecting rights, are confirmed, they fully convert those to mining rights, and then that deal goes through with ArcelorMittal. ArcelorMittal is now a 21.4% owner. If Kumba also loses the arbitration process around the supply agreement, the cost plus 3 supply agreement, they could be supplying for a very long time low-cost ore to the domestic market, so there's no upside on the prices. And then you could have ArcelorMittal saying, well, okay, now we're the 21.4% owner of the mine, therefore we'd like to participate in the profits. So suddenly there's another risk that's been added into the equation. So what looked like a sort of a shoo-in for Kumba, tactically very clever move in February to cancel the supply agreement and say, look, all the cards are in our hands. There seems to be a shifting of the balance of risk.
Terence, what impact does this whole issue have on the image of the country?
Well, I think that's for me the biggest worry. I think there's a whole uncertainty that's being raised around mineral rights and mineral rights security in South Africa has got investor attention. It came, we knew about this, but there's been a more recent case around Lonmin, and I must emphasize that the Lonmin case seems to be quite different in the way it was addressed, as well as the way it was applied for. But I think it raises questions about the Act, the MPRDA, the Mineral Petroleum Resources Development Act, and how many loopholes still exist in this Act. How many other miners haven't really competently converted their rights? How many other applications are now at the DMR, looking to exploit those loopholes? And will DMR, move in favour of these new opportunists? And the thing is, in the RCT instance, it seems the key value add that these opportunists and entrepreneurs are opportunists, but is it entrepreneurial? Are they bringing value to the business? Are they going to bring in new mining methods, which is what Civi Garden says he's going to be doing at the Lonmin properties? Not really. They're people with a fax machine and good lawyers. And it doesn't seem like that's the value. The value they're bringing is political connectedness, and that's got them quite far. They've got themselves right into a BEE deal that probably they were never going to be part of in the first place. So I think investors are going to be looking at this. We already saw the Fraser Institute came out this week, and we can see how it can turn on a tickie. Australia was seen as a very mining-friendly location. Kevin Rudd proposes a super profit tax, and their rating in terms of an investor-friendly place for miners has changed. The perception has changed very fast, and we've seen a dramatic fall in the perceptions around Australia. I have my suspicions. South Africa actually did very well in that survey, which was done in June, climbing something like 13 places. I have my suspicions that the next time round we're going to see a retardation in that. So this uncertainty, unfortunately, is going to come with costs.
Thank you very much. That is the Second Take show for this week. Thank you for watching, and join us again next week for more news analysis.